Welcome back in. Well, if inflation is impacting you, and I'm sure it is because it's doing it to all of us, there could be one thing you could cut that would save you some money, and it could be related to your mortgage payment. Joining us this morning, Marshall Clay with the Welsh Group to explain private mortgage insurance, or PMI, and how to eliminate it. Good to see you this morning.
Good to see you.
Now, I will say, by the way, we're going to tell you what it is first, but now is the time to do it. We'll get into that in a minute. But first of all, let's explain, what is PMI?
Yeah, so private mortgage insurance is an insurance product that most borrowers or most lenders demand on conventional home loans when the borrower does not exceed or does not meet the 20% down payment threshold. So it's just a way for those lenders to cover themselves in the event that you ultimately default on your loan.
And we're talking, I mean, it can be upwards of what? $150 to $200 extra a month?
Yeah, absolutely. So for your average middle class family, I mean, adding an additional $2,000 plus or minus to your monthly cash flow, I mean, that's a big deal, and particularly in this inflationary environment, any way that you can shave money off off those monthly expenses is a big victory.
All right, what's the first strategy somebody should think about?
Yeah, so traditionally people just typically pay off their monthly mortgage, or they make their monthly mortgage payment, and over the course of time they ultimately meet that 20% threshold, or that 22% threshold, where the PMI automatically drops off. Once you get to 20%, paying it down that way, you can make a request, and typically the lender will drop the private mortgage insurance.
But you do have to request it. They don't just say, hey, look at you, you've been doing a good job making your payments.
Correct. When you hit that 20% threshold, you have to make a request. It automatically drops off at 22%.
Okay.
Now, you mentioned time is kind of the essence, because over the last couple of years we've seen a dramatic increase in home prices. And so now what borrowers can do is they can call their lender and they can say, look, I want a reappraisal of my home, and typically it's an appraiser that the lender chooses, and it's at the borrower's expense, but you can do that. And if you get that reappraisal and now all of a sudden the amount of equity exceeds that 20% threshold, you can request to have that private mortgage.
Appraisal could be anywhere from $300 to $600, but probably well worth it, obviously, if you get that knocked off.
Yeah, absolutely. You can make that money up in two to 4 months. Yeah. I also recommend people explore the broker price opinion option. Okay. It's a way to get the new value of the home at a cheaper price. Some lenders will not allow for the broker price opinion. They demand that more formal appraisal, but it's something to at least explore with your lender to see if you can get that done at a lower price.
And if somehow you have a lump sum that came into your pocket, all of a sudden just go ahead and pay all that PMI off and you'll be good.
Absolutely, yeah. It's just an additional expense that's easy to get rid of if you happen to come in a lump sum.
All right, Marshall Clay from the Welsh Group, we do appreciate some good info.
All right, thank you.
Did you dress up for Halloween, by the way?
I did, but